JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 29th of March 2021. So welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always guys, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then guys, jumping into the charts, the first one I want to pick up here is Nikkei 225. Now, last week, as you know, we didn't have the Traders Espresso nor Tea Time videos, but on Thursday and Friday, of course. But during those days, we had a nice, beautiful reversal here back to the upside, and and I'll pick up on this very quickly. So, the ideas that I've mentioned to you last week, in the beginning of last week, was that, for example, here for Nikkei, I said to you that if we get a break of this upside line drawn from the low of the 22nd of December, yes, we could see some lower areas. However, still wait for that drop below the 28,325 territory in order to get a bit of better confirmation. As you can see, the index drifted lower, tested this area, and kind of reversed back to the upside and climbed back above this upside line. Of course, given the fact that it's still trading above it, increases the chances for a further move higher, especially if the index travels back above this 29,519 territory, which, as you can see, previously acted as a good area of resistance. Or actually, let me just adjust this. This has been running for quite a while now. Let me just adjust this for this level here, this 29,519. For that, I need to jump into a monthly chart here. You can see that this is the lowest point of May of 1990, guys. So this is where we're currently sitting at, just slightly below that level. We're going to keep an eye on it. And yep, if we get a nice push above this, then yes, we'll go for some higher levels. We'll go for that the psychological 30,000 territory, or even above that. So let's keep an eye on that one. For the downside, I would still prefer to wait for a drop below this. Not only back below this upside line, but also a drop below this 28,325 territory in order to go for some lower areas. Now jumping into Shanghai Composite, and here the index also managed to recover somewhat, but it's still struggling with this 3,460 territory, so approximately around here. In a way, for us to go for some higher levels, well, we need a stronger move here above this area, above this 3,460 territory. Also a nice daily candle staying above it could do the trick for more buyers, but at the moment, as you can see, we're kind of flirting with this 21-day EMA, with the 100-day EMA, and with this whole resistance area. We need that good strong move above it. For the downside, well, I mean, I would prefer to now, given the situation, given the picture that we have here, I would prefer to wait for a drop below the 3,344 or 45 zone right here, because we have the 200-day EMA here as well. So basically, all this a nice good drop below this hurdle, below the 200-day EMA, could do the trick for more sellers, and more of them could start joining in here. So keep your eyes on that one. So I do understand that we might be missing out on a bit of territory here. Still, I would prefer to kind of wait for that violation of one of those levels before, let's say, considering the next let's say short-term directional move. A quick update on Dow Jones Industrial Average. Now, last week also had a fantastic blow up here at the end of the week. We pushed higher, and yeah, I mean, we almost managed to reach that 33,228 zone, which is the all-time high for now. Let me just quickly have a look at the cash index and where we're currently sitting at. So we can see that the price is currently trading at around 32,900 levels. So basically, we are below that Friday's close, but not much. By not much, we're still above this 32,793 territory. So in a way, what we could see is something like this. Basically, we could see maybe a bit of a small little corrective move here to the downside if the price struggles to get back below this 32,793 territory. Then yep, another up move here could be possible, and maybe this time we could overcome the not the previous, but the current all-time high, and then yep, go for those slightly higher levels. Of course, now everybody's talking about the next the 34,000 mark, but again, let's go slowly on this one. I mean, because let's not rush into anything. For now, like I said, I'm going to consider this little scenario like this. The German index, the DAX, and yeah, I mean, we had a fantastic move here as well to the upside. The main during the main trading hours, the index didn't really, let's say, reach the all-time high, which is currently at 14,804. But during the after hours, I mean, during the futures market did push above this area. We did move over this level. Currently, the cash index is trading near the 14,000, excuse me, 14,750 territory. So basically, we're kind of below this hurdle. So what I can say is that if we get a nice good pop above this area, above this 14,804 zone, then yes, we'll go for those higher levels. We could even go for maybe for that psychological 15,000 mark. But again, let's not get ahead of ourselves. First, like I said, let's see if we can actually get back above this 14,804 zone. And the reason why I'm saying get back is because the cash index was already above it. So yeah, if we can climb above it, then yes, we'll go for some higher levels. For the downside, what I need to see here is a break of this short-term upside support line drawn from the low, the 26th of February, and then of course maybe a drop somewhere below this territory. I know that this 14,409 zone. Now I know that this level kind of is maybe a little bit too far. We could be missing out on a bit of area here, but to be honest, I'd rather be safe than sorry. And at the same time, a drop below this hurdle could kind of place the price below the 21-day EMA, and yep, lower levels could be met. So yeah, for now, long story short, for now, I'm going to keep an eye on some of these levels right here. The 14,409 zone on the downside, and for the upside, the 14,804 territory, and then for the downside, 14,409 territory. There we go, managed to squeeze that one out. Okay, so these are the levels. Like I said, be very careful, guys. We are near the all-time highs, and yeah, let's see how that's going to play out. And of course, keep your eyes on the situation currently. What's happening with that tanker stuck in in the Suez Canal. So yep, and of course the whole kind of vaccination issue, because and of course governments some governments jumping back into lockdown. But again, keep that in mind. Like I said, keep your eyes on the news. Of course, in terms of the economic calendar, today is a relatively quiet day in terms of economic data, but probably everything, not probably, but everything will kick in from tomorrow. And of course, we'll have on Friday, we have the NFPs as well, US NFPs. So yeah, keep that in mind. Right, now jumping into another index, but this one is a dollar index, and look at this beautiful move here. So last week, in the beginning of last week, I said to keep your eyes on this area here. The fact that we've managed to remain above this 92 territory, I said that this opens the door towards the 92.50 zone right here. But if that gets clear, then yes, my next target is the 200-day EMA together with this downside line drawn from the high of the 25th of September. So what we can see now is that the index is trying to make its way higher. You can see that the previous 2 days here of trading didn't result in a nice kind of daily candle staying above this downside line. So let's see if we can have this today. If we can, then yes, of course, we'll go for some higher levels. But if we cannot, then, well, guys, I mean, maybe we could see a reversal back down here. However, for the reversal, what I would like to see here is probably maybe a drop back below the 92 territory here. And at the same time, of course, a break of this upside line right here might do the trick here for more sellers. But like I said, still, even if we get a break of this upside line, still I would prefer to see a drop below the 92 zone. So keep that in mind. Like I said, let's be very careful here. And for now, I'm leaning a little bit more towards the upside. However, I need that daily candle first to stay above this downside line. Now, jumping into gold, and gold here is a little bit on the tricky side, so I would say, because and the most important thing here as well is probably to adjust ignore that. Now I wanted to adjust the downside line because what I wanted to draw here, and probably I'm going to just add it up and make an additional line. This downside line right here, not taken from the high of the 7th of August here. Just for the for now, I'm just going to keep that on the chart. Now, from the short-term perspective, what I can say here is that it's a little bit tricky here on gold, because if we refer to this downside line drawn from the high of the 6th of January, we'll see that we've managed to overcome it, and we are currently trading above this downside line, which kind of increases the chances for a possible move higher. However, I would prefer to wait for a push above the 1760 territory first before, let's say, aiming for slightly higher levels. But again, at the moment, it's a bit of a tricky one here. If we do get a push above this area, then yes, we'll go for slightly higher levels for this downside line, for the EMAs right here. But on the other hand, if we ignore, for example, this downside line, and we, for example, take it from the very short-term perspective, we'll see a possible descending triangle here, with which kind of has been forming here from around mid-March. But again, both of the kind of scenarios are a little bit on the tentative side, so that's why I'm gonna be I'm gonna keep an eye on both of those. So for the upside, I would say I need still to see that push above the 1760 territory. For the downside, I need to see at least a drop somewhere below the 1719 zone in order to consider maybe a bit of a larger, or not a larger, but a move lower. But again, from the not much to the downside, because overall we're still trading above this upside line. So that's what I'm saying. It's a bit of a confusing moment here on gold. So I would probably recommends to kind of be very, well, not probably, but always be very careful and cautious. Keep your eyes on some of the levels. You can keep an eye on all these upside, downside lines, but probably it will be the levels, the resistance and support levels that that kind of will be in the spotlight. So for now, yeah, that's this kind of little situation here on gold, unfortunately. Good morning, Rodrigo Diaz, to you too. I hope you're having a wonderful start of the day. So, yep, good morning to everybody as well. I mean, who's just joining in. But coming back to the instruments here, WTI Oil. Now, this one's a tricky one again as well, because also with the whole situation in the Suez Canal as well, so in the whole kind of oil, basically a lot of talks in the media right now, and try to kind of eliminate the noise, guys. Try to kind of keep your head kind of calm and fresh, and let's say you can refer to what's being said, but just sometimes, yep, also keep your eyes on the technicals as well, because here, for example, WTI oil, you can see that yes, we are still trading above this upside line drawn from the low of the 20th of April of last year. On the other hand, we're also trading below this downside line. So in other words, for now, we're kind of stuck here on WTI oil. And if you want to go for some lower areas, well, wait for a break of this upside line, drop below the 57.28 zone right here, marked by the low of last week. And then, yes, we could go for further declines. Now, and then we could go for these levels for the 53.90 or the 51.46 here. But for the upside, what I would need to see here is probably a push above the 63.80 territory right here in order to get a little bit more excited with the upside. So again, keep your eyes on this. This is a little bit tricky, but again, let's see what we can squeeze out of this one. But in order to squeeze something out of this one, then, well, we need to wait for a violation of one of my levels here. So for the upside, we have the 63.7980 zone. For the for the downside, I need to see a drop below this little hurdle right here. Let me just capture this one very quickly. There we go. Now, jumping into Bitcoin. So Bitcoin, if you remember last week, I told you to keep an eye on this little kind of channel here, potential channel, or a possible falling wedge pattern. But as you can see, it wasn't a falling wedge. We can get rid of that line, and it was somewhat of a falling channel. So something like this. Let me just adjust this very quickly. So there we go. So this is what I'm kind of referring to right now. So let's see if that's going to continue. Again, either way, if you want to go for some higher levels, still we need to see that break here above this downside line, the upper side of the falling channel, and then we could go for the upside. But again, at the moment, we're just stuck in this little pattern here. Yes, we are above the 21-day EMA, which could be seen as a positive, but we're stuck in this little kind of formation. We need to see a breakthrough the upper side of it before let's say targeting higher areas. For the downside, now here probably what I'm going to stick to here is a drop below the 54 territory here may open the door towards slightly lower areas like the 50,350 zone, where marked by the lower side of the falling channel. Or but again, a break of that, of course, yep. This 50,350 territory is marked by the low of the 25th of March here, near the lower side of the falling channel, and but if that gets cleared, of course, yep, you know the drill. I mean, it could go further south. But again, for now, again, it's sometimes difficult to kind of even evaluate these because when they're so undecisive. But we can, of course, we need to go from what we have, and of course, for now, that's the little game plan. So for the upside, it needs to break of the upper side of the falling channel, and maybe also a push above this little hurdle, the high of the 24th of March near the 57,212 for the downside. In the short run, I need to see a drop below the 54 mark here, 54,000 mark, and then go for lower areas. AUDUSD. So very quickly on this. So I talked about the pair last week, and I said that if we get a drop below the 0.7692 territory, then my next target is the 0.7625, 22 territory right here, and then the 0.7558 zone, which we managed to reach perfectly. So this area once again proved to be a very important support zone. So that's what I'm going to keep an eye on for now. In order for me to go for lower areas, I need to see a drop below this area, below this hurdle. For the also, what I'm going to keep an eye on here is this downside line, and in other words, now we could be seeing here a possible descending triangle forming. Now, of course, some of you might say maybe we have ourselves a little channel, a falling channel. Could be, of course. Don't get me wrong. We're not excluding any possibility here, but any potential kind of pattern here. But keep your eyes. It's not a very clear one. And even though if you want to go for the downside, still you would need to wait until we break below this 0.7558 territory, because as you can see, it proved to be a very strong area of support. So that's why even if it is a falling channel, we need that break here below this hurdle. For the upside, sorry, I would prefer to I prefer to wait for a violation of this downside line taken from the high of the 25th of February. And then just maybe a push above the 0.7850 territory. But then again, don't get me wrong, this level might be a little bit too high maybe, but that's why I'm gonna probably stick to this little area right here. That's the high, I think, of last week. Let me just quickly double check. So no, the high of last week was this one, the 0.7756. A nice good pop above this high of last week. Yep, could do the trick for more buyers, so keep that in mind. USDJPY, quick update. So the idea worked out. Last week I said to you that if we get a push up of the 109.23, my next target is the 109.85, and then I'll take it from there, because we had already quite a decent up move. So that's why that's why I had only this little kind of small move here. And to be honest, it kind of made sense, because look at what happened here. We pushed above this area, and then yep, we tested this 109.85 level, marked by the highest point of June of 2020, last year. For now, I would say like this: if it continues to balance above this hurdle, this 109.23, then yes, we could see another push higher. But if you're a little bit on the cautious side, given the fact that we had already quite a decent up move, then probably wait for this push above this 109.85, and then yes, we could go for some higher levels. Then my next target is the 111.72 territory. So that's why I will be very careful here, guys. I mean, we do have a bit of a quite kind of a large area to fill here. I mean, we could keep an eye on this little inside swing low here of the 25th of March of last year, near the 110.75. But again, yeah, well, actually, I'll keep this on the chart for now. That could be my little my next target. But for the downside, guys, if you want to look at some lower areas, I would still stick to the same game plan. As I've mentioned previously, a drop below the 108.34 territory here might do the trick for more sellers. USD CAD, so pushing higher, and yep, I mean, it finally managed to violate this downside line taken from the high of the 19th of March of last year, and we managed to stay above this 1.2590 territory. So let's see if we can get a further push north here. Again, the fact that it's still trading above this 1.2590 territory is seen as a nice positive. Let me just adjust this arrow here. I'm not going to be so aggressive here. I'm going to just aim for this little area right now. The area near the 1.2760 mark, somewhere around here, not far from this 100-day EMA, because as you can see previously it got tested here, but we did have some overshoots, but eventually neither of the daily candles managed to remain above it. So that's why this area here could be a very, very attractive one initially, But if it struggles to overcome it, yep, another slide could be possible. So keep that in mind. Quick update on GBP CHF. Still watching this area, this whole area near the 1.2990 zone. So waiting for that pop above this area first before, let's say, getting a little bit more excited with higher levels. That's why, guys, for now, yep, keep your eyes on this. Keep your eyes on the 1.2990. If we get a clear break above it and we see the daily candle staying above it, then yes, higher levels could be met. Now, jumping into EURGBP. Here we have a bit of a madness. Once again, and this is the reason why I said to you guys, keep your eyes on this 0.8628 territory. So, because we had last week a few false breakouts here, but we didn't really get that daily candle staying above it. And you can see we needed that daily candle to remain above the 0.8628 zone in order to go for some higher levels, but instead we failed to kind of do that, and instead, yep, we dropped heavily to the downside back to this hurdle right here. And last week I've mentioned that if we get a drop below this 0.8596 territory, or in other words, this 0.86 territory, then yes, we'll go for this key support area near the 0.8540 level. Now, in order to go for downside, further downside, a drop below the 0.8540 territory would be needed. If we get a nice good daily candle staying below that, then yes, we'll go for further declines. But if we don't, then yep, the pair might just kind of move sideways for a little bit here. That's why still for the upside, I would need to see a nice good push and a daily candle staying above the 0.8628 zone here in order to get a little bit more excited with higher levels. For now, I'm just going to observe the price action, but the fact that it's leaning a little bit more towards the downside here, yep, of course, brings a few extra sellers here, could bring a few extra sellers into the game here. But as I said, I need that daily candle to remain below the 0.8540 territory. And a quick update on EURUSD. So drifting lower, traded last week, traded below this 200-day EMA and remained below it. Now we're also trading below this downside line right here, taken from the high of the 25th of February. And yeah, so let's put it this way. I mean, as long as we remain below this downside line and below the 200-day EMA, we'll continue targeting the downside, guys. So keep that in mind. If we get a break of this downside line and a push above the 200-day EMA, then yep, we'll start considering maybe some higher levels again, but only in the near term, because we do have a bunch of obstacles here on the way higher. So guys, that's it for this session. I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your likes, your views, your comments, guys. I really do. So if there's a specific instrument you would like me to cover in my next session, for example, you can always leave a comment after the video gets up, well, not uploaded, but yeah, it's finished. I'm finished with the video. You can leave a comment there, and I'll always pick up on that. So have a wonderful trading day, stay safe, and I'll see you later. Thank you very much, and bye-bye.